This 4th of July week 2020, we're seeing the largest ongoing COMEX silver stopped contract delivery figures in over 4 decades of time. We're about to dive into details of that topic and more. Hello, this is James Anderson on behalf of SDBullion.com. I'm pretty confident you're going to like this Bullion market update, so please help me hack the algorithm of this platform by smashing the like button below so that others interested in financial markets might also learn about the unprecedented movements happening low-key building beneath the surface in both global silver and gold markets. We're about to dig into ongoing details of a building an historically large delivery month in the CME Group's COMEX silver futures contract trading market. As well, we'll have a look at further gargantuan flows of silver going into a few of the major exchange-traded funds of late. But first, let me start by giving us all a visual context for the underlying silver bullion numbers we're about to cover. This image was taken in the year 1995 and it's courtesy of the CPM Group. In the image, one can directly eyeball about 2 million ounces of silver bullion bars, and if you add up the inferred silver bullion sitting on those pallets, not reflecting the light within the warehouse, perhaps conservatively, we're looking at about 5 million ounces total of silver held on all those wooden pallets. We used this vintage silver warehouse shot late last year in a video where we estimated a bullion above ground answer to the question, how much silver is in the world? We'll leave a link to that video at the end of this week's update in case you missed it. You probably want to know the information in that video too because it deals with the last time we had over 200 million ounces of silver bullion bars get drained from the COMEX warehouse system in a matter of a few short years. But back to this image. It shows about 250 pallets of non-homogeneous industrial size 1,000 ounce silver bullion bars stacked on top of one another. The word non-homogeneous simply means that they're not 1,000 ounce perfect. They're typically off ounce, meaning there'll be 970 ounces and 1,030 ounces, etc. Every silver bar you see, though, weighs roughly about 70 pounds each. Each time we refer back to this image in this week's update, remember it represents about 5 million ounces of silver bullion. Just 2 weeks ago, we showed you on this channel new record-sized COMEX gold stopped contract delivery data. This week, you get to see some fresh and unprecedented COMEX silver stopped contract delivery data building now too. Record-sized blue bar that you see here, it alone represents 11,458 stopped COMEX silver contracts, of which alleged RICO Precious Metals Trading Desk JP Morgan is involved in more than half of them, dominating the COMEX silver trading game, like former CFTC Commissioner Bart Childen admitted publicly on record that they did before passing away last year in 2019. According to the CFTC, the 2020 spot month limit is 3,000 COMEX silver contracts per trader. There's also a host of exemptions and fine print, which surely they would cite if pressed for why they allowed JP Morgan to, on face value, flaunt nearly 2 times the position limit sizes the CFTC claims to regulate. But let's digress. Back to the size of these recent COMEX silver stopped contracts. This chart will back history out to 1 year's context, now to a 2-year context, then a 5-year context. You may have to squint to see the blue line. And finally, this is as far back in time as Nick Lard's COMEX silver delivery charts go. This is where this record-sized silver stopped contract delivery data towers the last 15 years of time. And the growing, now over 13,000 stopped contracts of July 2020 equate to 65 million ounces of potential silver bullion. Of course, we will see how much will be delivered physically and then withdrawn from the COMEX fractional silver reserve pile in the months coming. But this record 65 million ounce stopped contract month potentially represents about 13 of these silver bar stashes sitting in COMEX warehouses. Now onwards to this week's ridiculously sized silver ETF bullion inflows. In 1 day alone this past week, updated on June 30th, 2020, over 10 million ounces of silver went into 3 of these ETFs. Look far left to the escalating chart's silver stashes spiking higher in black lines. That's basically 2 of these in 1 day of inflows. And just now, I looked at the July 1st update, and another 5 million ounces flowing mainly into another silver ETF. So another one of these rooms trucked into silver ETF stashes in just one day of time this past week. For additional context, think of it this way. The world's most bought and sold silver bullion coin sales to date, nearly the entire year's amount, or the one before that, just went into a handful of silver ETFs in a smattering of a couple days this past week. I cannot stress enough how ridiculously large these data points and inflows have become relative to silver markets history. Looking ahead, the now melded Federal Reserve and U.S. Treasury have been publicly hinting that more currency creator go burr infinite bailouts are likely coming ahead, especially now that the viral crisis continues to numerically ramp through the United States and further lockdowns following restarts are happening and to be expected ahead. People are still without work to the tune of almost half the adult U.S. population, and world trade is now a train wreck near standstill. The bankruptcy wall of the hurricane is yet to fully hit, and there will certainly be more fiat currency bailouts worldwide, and central bank balance sheets are only generally ramping in one direction, up. Remember too that in 2015 the CME Group made a sly rule change, which occurred right near the bottom of the cyclical bear in silver and gold prices, established potential explosive future daily price volatility on its COMEX, NYMEX price discovery markets. We've already seen them hit in palladium. The CME Group's COMEX, NYMEX did not establish these massive daily price fluctuation limits for fun. More so for volatility protection for what is likely coming sooner than many may think. And it now looks very likely that off this QE infinity and economic lockdown depression, that gold is going to climb out of its cup formation sooner rather than later. And both silver and platinum will begin forming the other side of their cup formations to come. The literal CEO of the COMEX NYMEX, only a few short years back, mentioned the following on the Fox Business Channel.
Well, I think that's really interesting that, Neil, what you raised, especially with the metals, because if you look at the price of gold today, just around $1,200 an ounce, and if you look at back in the early 80s, it was trading around $800 an ounce. So if you adjust for inflation, you should have gold somewhere around $2,000 to $3,000 an ounce, but we don't. And then you look at what's gone on in the world, and it should probably be at $5,000 or $6,000 an ounce, but it's not. So the reason is, I think a lot of us have become so jaded, and whatever happens in the world, it's like yesterday's newspaper in 5 minutes. So people are dismissing some of these events to a point where one day you won't be able to dismiss them, and you'll see a huge move in some of these precious metals and other products.
I know you and I are sounding like the Cocoon Club here, but I think a lot of young investors, they don't remember that a lot of this stuff.
No.
Historically, we have, resisted of late.
Terry Duffy makes over $10 million a year, CEO of the CME Group's CBIP program, which allows approved foreign central banks or their trading proxy bank desks to enjoy high-volume trading discounts in the very FX, derivatives, and commodity markets that the CME Group discovers prices for. He's not going to risk his lucrative lifestyle talking like a gold bug nutball on television. Rather, he said these things to cover himself when the precious metals and commodity complex melts up, as the fiat Federal Reserve note goes into a massive secular bear market likely later this decade. We are in the midst of unprecedented times. It will come as no surprise to see precious metal values ramp and rip higher, reflecting all this and much more in the coming years ahead. That's all for this week. U.S. viewers, have an exceptional and safe 4th of July holiday weekend, and to the rest of you out there, we wish you and yours the very best. If you enjoyed this content, be sure to give our video a thumbs up. To keep getting bullion-related news and industry insights, be sure to subscribe to our channel. Finally, hit that alert button so you know when we publish fresh content. Give us your thoughts in the comments below. Let us know what you think and which topics you want to hear more about.